This video deals with the general journal entries required in Learning Unit 4 for the adjustments made at the end of the financial year. According to the accrual concept, expenses are assigned to the financial period in which they are incurred and not paid, and income is assigned to the period in which they are earned, not received. Now, this concept gives rise to certain adjustments that we need to make at the end of the financial year. In our statement of profit or loss and other comprehensive income, we record the income and the expenses for the current financial year, and we use that to measure the performance of the business by calculating a profit or a loss. If we include income and expenses for future financial years, it will distort our calculation of the profit or loss and therefore distort the measurement of the performance of the business. These adjustments that we then have to make to reflect our income and expenses at the correct amounts are double entries. With other words, we need a debit and we need a credit. These adjustment entries that we're going to make will always impact two sides. So on the one side, it will impact an income or expense account because we need to adjust those balances to the amounts for the current financial year. And of course, our income and expense accounts sits in our statement of profit or loss and other comprehensive income. On the other side, these adjustments will impact a current asset or a current liability. And these current assets and liabilities will form part of our statement of financial position. This is what a general journal looks like. And let's just recap again quickly the steps that we need to follow to make a general journal entry. A general journal entry then consists out of 4 steps. Step number 1, you write down the name of the general ledger account that you will debit. Step number 2, write down the name of the general ledger account that you will credit. Add in your short narration, that's that short 1 sentence, why are you making this entry? And remember again, a general journal entry is a double entry. So it has a debit and a credit, and the debit and credit amounts have to be equal. For learning units 3 and 4 questions, I always recommend that you draw a timeline. And in this timeline, you indicate the beginning of the financial year and the end of the financial year so that you have got a clear picture in your mind of the 12-month period that this particular question deals with. Then you will also be able to see clearly which expenses you still need to accrue for because we haven't received or paid all of those expenses. And you'll also be able to see which income and expenses were already paid or received for the next financial year. So it's always helpful if you quickly draw this on your assessment so that you have a clear picture of the period over which this question goes. The first general journal entry that we're going to look at is the one that we'll do for accrued expenses. Now, an accrued expense is an expense that you still need to pay for the current year. So in this particular example, we still need to pay salaries and wages for the last month of the financial year. An accrued expense is a current liability to the business and will therefore be in the statement of financial position under trade and other payables. So the entry that we always do for an accrued expense is we debit the expense account, You can see there I've debited salaries and wages, and then we're going to credit the accrued expense, because remember again, an accrued expense is a current liability. On the other hand, it's also possible that you have already paid expenses for the next financial year, and we call these kind of expenses prepaid expenses. In the example up on the screen, we have already paid the telephone account for the next month, or the first month rather, of the financial year. A prepaid expense is a current asset, and it goes to your statement of financial position as a trade and other receivable. The entry that we will make for prepaid expenses, now we're going to debit the prepaid expense account, because remember again, this account is an asset to the business. That's why we're going to debit it, and we're going to credit the expense account. So we're going to credit the expense that we already paid for the next financial year. Remember again, if we apply dead click, expenses will always increase on the debit side and they decrease on the credit side. Where income items, a debit for an income item is the same as saying you minus it from the income. And if you credit an income item, it's the same as saying you are plussing the amount to the income. So when we look at the examples of the income accounts now, we have a scenario where we can accrue income. This means we haven't yet received all of the income owing to us on a particular item. So the one that we have got here up on the screen is interest that's still owing to us on a fixed deposit. So an accrued income account is deemed to be a current asset, and this will then be on the statement of financial position under your trade and other receivables. So in the example up on the screen now, we have interest that's still owing to us on the fixed deposit. So we're going to debit the accrued income account. You can see there the amount sits in the debit column. And I'm debiting this accrued income account because it is my current asset. So in other words, it is like a debtor to the business. And I'm going to credit the interest on fixed deposit account because I'm still going to increase that income account because there's still interest owing to us for this particular financial year. Then on the other hand, there can also be income that we've already received for the next financial year. We call that kind of income received in advance, and income received in advance is one of our current liabilities. So again, it will go to the statement of financial position, and now it will form part of your trade and other payables. The entry that we will process now, this time around, we will debit the income account. Because remember again, a debit on the income account is the same as saying minus, because we want to subtract this amount from the income because it actually pertains to the next financial year. And then we're going to credit this account that we call income received in advance. So that is our current liability account. Remember as well to add in your narration, which is that short sentence that just tells me what is this transaction about. And if you look at my entry, you can also clearly see that my debit and credit amounts are equal, because this is a double entry, and I therefore need to make sure that the amounts that I've entered in the debit and credit columns are equal to each other. The next type of adjustments that we often see in Learning Unit 4 questions are the ones that relate to the allowance for credit losses. Now, in the entry that I've got up on your screen right now, we're going to create an allowance for credit losses. The double entry that we're going to make is we're going to debit an expense account called the allowance for credit losses adjustment. Okay, so just make sure you add in the word adjustment there to the end of your account name. And this account is an expense account, so it will go, if you look here in my green block, it will go to your statement of profit or loss and other comprehensive income. Then the credit lies in the allowance for credit losses account. And if you look in my yellow block down here, this account is referred to as a negative asset, and it will sit in your statement of financial position as part of your trade and other receivables. Now, our allowance for credit losses can also be increased or decreased. Please go and look in your textbook. There are 3 examples around the allowance for credit losses. There is how to create the allowance, like my previous slide. And then there are also the entries for increasing an existing allowance or decreasing an existing allowance. So please go back to your textbook, examples 4.2 and 4.3, to see the entries for these transactions. This slide just serves as a quick reminder. When we talk about credit losses, there's credit losses recovered, the allowance for credit losses, and the allowance for credit losses adjustment. And sometimes this can become a little bit confusing because all these account names sound like they are nearly the same. So remember to always just come back to this slide that gives you a quick summary of each of these different accounts. And in this last column over here, I just show you in which one of our financial statements will you include each of these accounts. And then the last entry that we mustn't forget about when we do these adjustments is the one that we already covered in Learning Unit 3. And this is your depreciation entry. So remember, at the end of the year, we will calculate the depreciation on each of our groups of assets, and then we will process this entry where we will debit depreciation and we will credit the accumulated depreciation for that particular group of assets. So don't forget about this entry that comes from Learning Unit number 3. I would really recommend that you go and practice these general journal entries now. You can practice questions 4.1, 4.5, and 4.6 in your textbook. Each of these questions requires the student to journalize the adjustments. And I think you need to go and do these exercises to make sure that you are able to prepare these general journal entries. Remember again, the answers to all the textbook questions can be found at the back of your textbooks in Annexure A. Being able to do the general journal entries for adjustments is only one of the outcomes of Learning Unit 4 on which we can test you in the assessments. So when you prepare for the upcoming assessments, also just go through this list of outcomes and make sure that you are able to answer a question based on each of the outcomes for Learning Unit number 4. Remember again, as with Accounting 1A, your key to success this semester is to attend all your classes, to then go home and work at home and redo the exercises. Be sure not to fall behind this semester, and stay in touch with your lecturer and discuss with your lecturer if you have got any concerns or questions on this learning unit or any of the other learning units in second semester. When you prepare yourself for Learning Unit 4, there are two excellent examples in this learning unit, example 4.5 and 4.6. The one looks specifically at the perpetual inventory system and the other one at the periodic inventory system. These two examples cover all the learning outcomes for Learning Unit 4, and they are excellent revision exercises to do in your preparation for the assessments. If you have any questions on this learning unit, please get in touch with your lecturer. And lastly, please remember that this video is only a teaching aid and it shouldn't replace anything that you are doing in class or your revision work that you are doing at home.